Well, good afternoon, traders, and we've got a fairly defensive day here across the Asia region, and that's sort of warming up for the open of the European markets. It's a bit of a sea of red, as you can see from the table, but I think it really disguises the fact that the moves, which while they're not down by a particularly large amount. If you look at the ASX, it's pretty flat. There's no real change going on there. The Hang Seng down 91 points, not a particularly big percentage change, and you've got small losses coming through in the Nikkei and also from the Chinese equity market there as well. Certainly the opening calls for the European markets somewhat on the back foot. We've got the DAX down 47 points and the FTSE, if it was to open right now, would be down 16 points. And we can see the Wall Street cash starting to see a little bit of a move down. S&P futures are down 0.3% as we speak. There's a little bit of selling coming through. Certainly in FX markets, there has been a propensity to be long the yen. Hasn't been any major news coming out. We've seen, I suppose, on the economic data side, we've seen a fairly weak capex number coming from Australia. That's going to build into the GDP numbers. Remember, yesterday we saw those really poor construction numbers, and that's lowered the expectations for the upcoming GDP print in Australia. Now, if you have a look at the Aussie dollar, we're down 7 pips, so it's not really anything too sinister, but the daily chart, you can see that really strong buying coming into around 67 cents. If we go down and test, it does break that. I think that'll be a very powerful signal. We've obviously seen the Chinese currency looking somewhat weaker today. Again, we saw the PBOC in its daily fixing at 11:15 Eastern Standard Time, fixing the midpoint of $CNY, the onshore currency there, much lower than what the street was anticipating. So again, the PBOC not weaponizing the Chinese yuan anytime soon. There's been a lot of flow into gold today, and it's probably one of our most actively traded products. Again, we're starting to see some buying kicking in. You've got the gold price there in US dollar terms, 15.43, up $4 or so. But the flow today from clients has been staggering. You know, easily the most traded market we've been seeing there. Certainly a lot of bullish flow coming through. People still expecting to see some good numbers there on the upside. We've also seen some big numbers on the pound as well. Obviously, the pound has become the more volatile. It's been, in terms of implied volatility, it's been the most volatile currency, or the most implied volatility currency for some time, and that continues to be the case. Obviously, the new news overnight is that we've seen Parliament being prorogued through that period of 14th of September through to 12th of September through to the 14th of October. That obviously marches the idea that we're going to get a general election being called probably after a no confidence vote in that sort of 3rd to September to the 12th of September period. That period that we're going to see in the UK is going to be incredibly volatile for the pound. So traders around that do need to be aware of the risks around that period, the 3rd of September through to the 12th of September. The opportunity for the Remainers to come out and try and pull some legislation to extend Article 50 and give a better sense of a deal is there. It's probably a low probability, but obviously people are looking whether we see a confidence vote being pulled on the Johnson government. Of course, if we do see that situation being played out, will a caretaker government be formed? One suspects probably not, and then we'll probably be looking at a new general election in November. And there's another factors that come in, but certainly the pound through that period is going to be incredibly volatile. And of course, the idea that we could see no deal coming through after Parliament comes back on the 14th of October, if we haven't seen a general election being called by then of course you've got a situation where no deal really ramps up and the probability increases significantly, and pound will probably go nicely below 120 in that situation. So we've seen a lot of people asking what this all means, how we trade the pound. It's going to be something that we're going to be discussing through future videos. But you know, the pound, if you're trading that at the moment, do consider your position sizing. It's going to be fundamental around that. If we go to European trade, we do have some GDP numbers coming out of France. We're not expect that to necessarily be a market mover. We've got inflation numbers coming out of Germany and also from the various regions just before that situation. In the US tonight, we've got second quarter GDP. The market's expecting that to be around 2%. And we've got claims as well. So certainly not expecting any major market movers from that data, but certainly everyone's focused on Brexit. That's the new talk that we're seeing there, and people are really getting set in that gold price again.